Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. Could we have any more lackluster on Monday? Yeah, that was the tiniest range I think we've seen in, geez, seems like forever. From the high to the low. It looks significant from the 15 because it gapped up 18. But I think our intraday range was pretty tiny when we go back and look at it. We had started the turnaround of the shakeout. Okay, so we went from the yellow white histogram there, plus 54, plus 77 to 38. Now we're up to 4, and we still don't have green over red, and shorts pretty much flat within this. The short-term buyer is pretty stagnant, and the start of rising orange that could produce a little bit more downside pressure, but we're sitting right on all these ABM support lines. You have obviously above on the upside, like we talked about before, 27.50, but then there's the white 24, magenta 29, the green is at 17, so quite a mix. And so it's easy to play off any of those levels. They become significant. Likewise, the NQ, a little bit weaker here. That the shakeout for the ES had turned around. However, the NQ shakeout overall much higher, stronger, and looking much closer to a crossover there. The Euro had a little bit of a pop. It's giving back some of that right now. We don't expect it to do a whole lot of anything, though this is improving without a dip back below the red line. We had that. I mean, this is such a beautiful chart because you have this deep distribution level here with the magenta. We get a pop, and immediately it gets to nearly an extreme before it's even crossed the 23%. That's usually an indication that the algos are pretty much spent out, getting overwhelmed, and then sure enough, I mean, the big collapse retraces the low, makes a new low. It's beautiful. Treasury's still rising, despite evidence to the contrary that inflation will continue to rise with oil continuing to move forward. It's going to get into an interesting concept there because TLT should be falling there as oil's rising, euro dropping. So it's a little bit counter. Gold actually rising again. That should produce the counter on TLT, and it's not quite doing it, which means you've got a flight to safety. There's some systemic concern in people's minds. So here's what we had. We had the giant gap up, and as you can see, we made slightly higher high, but at the end of the day, from the gap was right there, we pretty much closed just fractionally higher. So from a movement-wise, wasn't so clean. We had some interesting DOC spreads that came in here. A lot of them were semi-bullish. What happened with this one is we had a deep move below the steel under the negative 13.5 from a very elevated red. Crossed over right about there, came across for a few bars, but the problem with that distance, we've talked about this before, once you start getting back above the 13, if you don't cross that red pretty much, well, within a couple of bars, usually you get the turnaround, and sure enough, we didn't get a cascade or a break of the red below zero, and so it created a new pop. Was it all that significant? No, it just returned back to the highs, made a slightly newer high, and then produced another one, a little bit higher from that reading, but also much lower from the red standpoint. And so that one actually produced a pretty significant move all the way back down to the 50%, where we got that 50% where we get these dark green ones, which indicates that usually that bullish move right there as you approach the 50%. And then we got a little bit of a pop from it, but it wasn't sustainable for very long. We came up with the dip. We got below the green first, took a little while to get below the orange after the big pop, but at that point the rising orange is a negative until you get the little dip here. But at that point, ended up with this nice little crossover right there of the cyan green separation, and then steel dip below, cyan with orange moving above, and that was the beginning of a little bit more weakness that broke down all the way to the 23%. But look at this rise in the Morganachis. It just shows you how compressed that day was, that it just squeezed. We went from 27 to 15 like instantly, and so that range narrowed out, and pretty much just where we are here. We're seeing a little bit of pop up here in post market. just barely over the green line there. So nothing overly dramatic, and we're pretty much flatlining at this particular stage. So this is just some random. And this isn't always an interesting one too, because unless you get significant algo movement with these extreme moves of orange and steel above or below the plus 13.5, a lot of times you just get into a malaise where it's literally just regular traders doing their thing, and we're not getting algo activation, which is going to create much more movement. It did fill in all the positive extremes though from the high. We had a couple more that were coming across over here, and all these got filled in on that nice little dip right there. So, all in all, still within that general bullish bias, despite the fact that we've got some fairly weak daily readings. We just have to take that with what it is until we get more defined idea as to what the impact of, no China sanctions, and obviously that's a bonus for the market, and how far the euro is going to ebb. With the whole Italian setup in that, we could see a little bit more systemic risk, and then it becomes a question of, does that risk begin to impact the market as obviously euro money moves towards the US? That's obviously bolstering things, but at a certain point, whether there'll need to be a liquidity event and them having to pull some of that money back, that would definitely put much more downside pressure on the market. So we'll keep an eye on it and report it as necessary. There wasn't anything really to talk about from this day, from that gap. It was pretty boring. Hopefully it'll be a little more excitement for Tuesday. As always though, trade well, and we will talk again later.